Iran's budget for the coming Persian year, starting March 2019, is set on the sale of 1.5 million barrels per day. Iranian oil export is already under 1 million barrels per day, and we are thinking that maximum it could go to 1.1 million barrels per day if Japan and South Korea and other countries would, in a best case scenario, would resume their imports from Iran. So it's based on a 1.5 million barrels of crude oil sale, and the oil price is of $50. And there's lots of volatility in the market, and we are not sure if the prices would remain $50 or not. Iran is going to have severe problems, of course, with their budget, and they are going to tweak on their currency to adjust their currency with the dollar rates to generate more reals to pay back their debts and salaries. But that is going to affect their currency value in compared to dollars, so it might devaluate the currency. The other thing that they are trying to launch is the cryptocurrency, and they're trying to work on that to generate some more income through that. And they have done some agreements with Russia and Armenia, a trilateral cryptocurrency agreement. But U.S. government and Congress are preparing to put additional sanctions to limit that. So with regard with the waivers, it would be really market related. We cannot say. I don't know. I don't think there's a really clear answer by now. What we think is that some of these 8 countries, would not be granted any more waivers because to begin with, they never resumed their imports. Italy, Greece, and Taiwan, they really didn't import. We don't think Chinese or South Korean are keen. So we think that China, India, and Turkey would definitely receive some waivers and maybe reduced amount, but it depends on the market conditions and also the ongoing trade negotiations with China. If China is going to really comply with U.S. sanctions or not. But we see the trend of the oil delivery and contracts in a way that Chinese refineries, despite the last 2 months of the 2018 that they seized their import from U.S., they are going to resume their imports. So if you're expecting U.S. export to continue and be resumed in 2019, we could expect from now that China would comply still with the U.S. sanctions. China and Russia have not been so far really helpful partner as they used to be historically to Iran. Iranian government tried to sign an agreement for oil swap, so Russia would try helping selling some of Iranian oil through swap and barter relation. This never went through. Russian companies and government do not want to have further tensions with U.S. And also doesn't have any profit for Russian government. We haven't seen any investment. Both countries were highly complied with U.S. sanctions. China have reduced its imports of Iranian oil significantly. Under the nuclear sanctions, they were importing about 500,000 barrels per day. Now they're down to 350. Now, of course, we have U.S. supplies in the market too, but Chinese are putting very hard terms. So we lately heard that Chinese are going to invest $3 billion in Iran, but the terms of negotiations are in a way that naturally Iran would not agree with them. They want to use some of these money that they are holding into their banks as a credit in return for purchase of Iranian oil to be used as the investment, so be immediately paid back to Chinese companies. They want to import their own, they want to use their own Chinese equipment, no local content from Iran. But most importantly, they would like to be paid back in the oil that is produced in the field that they are going to invest as part of the waivers, which Iran would not naturally agree with that, because when they're selling limited amount of oil, they need that credit to import or purchase their necessary good. They cannot invest that on increasing oil from their fields. We expect that this process go further the same way and it is, and we don't think that there's going to be any significant investment, especially in the upstream in Iran. So we won't see any additional production capacity increase coming from foreign investment, because the terms are not agreeable to Iranian government.